A 2021 survey done by CNBC found that 8% of adult Americans are wealthy enough to be classified as millionaires. Being at 8% by the 67-year-old retirement age is more attainable than ever thanks to the modern ease of stock market investing. However, many Americans still don't know where to invest, how to invest, or what to invest in. So the stock market used to be a top 1% earners thing in the United States for a really long time. But the modern technology has made it very efficient and effective for the average person to get some money in the stock market and begin investing. And the stock market is a great tool in the United States used for companies and individuals to grow their capital or their cash flow for their business. So I've been investing in the stock market since I was 17 years old in high school, and I'm now 19, and this is my sophomore year at LSU. And I've seen about a 32% gain in my stock market portfolio, which is a pretty good return over 2.5 years, because the average return in the stock market is about 8% per year. So I've been beating the average. So I've kind of seen the wonders of compounding interest and how you can build your wealth through the stock market. And so you don't want to be the person looking back when you're 60 years old, trying to retire and realizing that you're still living paycheck to paycheck. You have no money saved up. You haven't grown your wealth. You haven't had your money work for you. So now you don't know how you're going to retire, and you might have to work for the rest of your life into your grave. So financial literacy is a skill that everyone in America needs to learn in order to set themselves and their families up for a happy, peaceful life and retirement. So I want to share with you today why you should invest in the stock market, how to invest in the stock market, and all you have to do is use a little discipline and delay gratification with your money. So let me begin by answering the question of why the stock market is in your best interest to invest in. So according to a 2020 article in the Motley Fool titled "Why Is It Important to Invest in Stocks" by Matthew DeLallo, the stock market on average, like I said, returns between 8 and 12% per year on your investments. And it gives the investor, the stock market in particular, gives the investor the potential to earn higher returns on your investments than something like gold or government bonds. You get to protect your wealth from inflation, since the stock market returns often outpace the rate of inflation in the United States. And you also have the ability to earn passive income from dividends, which are payouts that the company that you're invested in will pay you sometimes as kind of a thank you for investing in them. Or if they have a really good year, they'll pay you out a little bit, just since you're an owner of the company in the stock market, just to pay out their profits to their owners. So now that we've gone over why investing in the stock market can make you money, let's talk about how to do it effectively, because there definitely is a way to mess it up and lose money in the stock market. So according to a 2020 article found on Investopedia titled "Top 10 Tips for a Successful Long-Term Investing Career" by Robert C. Kelly, the stock market is riddled with uncertainty, but certain tried and true principles can help investors boost their chances for long-term success. So it's important to educate people that the stock market is only gambling if you make it gambling for yourself. So a 1999 article that I found on the LSU library database by John Whiteley said that when you're making plans for savings and investments, you got to decide the degree of risk that you're okay with undertaking. And you got to realize that your degree of risk is not set in stone. So if you have a really good year and you have more money to invest in the stock market, then maybe it's a year you put a little more in, you're a little riskier. But that's not always the case. In a year you may lose your job, or something like COVID happens, and you got to pull some money out of the stock market. You got to lower your risk, and that's perfectly okay. It's something that people sometimes don't understand. Your risk doesn't always have to stay the same. And sorry. Short-term trades on single stocks are the risky ones that aren't really recommended by expert investors. And the people that make consistent money from the stock market are those who buy quality ETFs and mutual funds and hold them over the long term. So a couple benefits of investing in the stock market are you get to protect your wealth from inflation. So the value of the US dollar depreciates around 3% each year, which means you're losing about 3% of the value of your money every year. That's kind of like gas, like 30 years ago might have only been $1 a gallon, and now it's $3 because the value of the dollar went down. However, the stock market nets 8% a year. So you're beating inflation, you're making 5% on your money, the 8% from the stock market minus the 3% for inflation. You're beating that 5% every year. Which is great because you're not losing value on your money by just having it sit in a savings account. You're using your money to work for you. So you don't want to sit on cash over the long term, because that's equivalent to losing money, because the value of money decreases over the long term. And so let's flash forward to the year 2070, a year where most of us will be already retired or working on it. So I don't know about you guys, but when I'm 70, I'd rather be hanging out at my beach house with a healthy bank account than still working my 9 to 5, because I'm not gonna be able to retire without having a paycheck coming in each week. So in a 2021 article by Dave Ramsey, he talks about investing early and consistently is the best way to continue building wealth over the course of your life. And the math that he did is pretty cool. So if you begin putting away $300 a month when you're 25, you could reach millionaire status by age 60, and you'll have $2 million on average by age 67. And remember, you're starting at age 25, just by investing $300 a month consistently, and the stock market doing its job, returning to 8% each year on your money. So now that you know why investing is necessary for financial success, go out there and do it. You know, we talked about how you got to start early, so this is a great time to begin learning about the stock market, investing your money, getting in the routine of putting money in your stock market account, whether you use TD Ameritrade, E-Trade, Robinhood, any other brokers that are trusted that you're okay with using. I personally use TD Ameritrade. I think it's a great one. And by doing this, you can set yourself up for retirement. You can have financial success faster, and you can live a happier life, because money's not going to be a constant worry. And remember, don't spend your whole life at work just to be rewarded by more work. Let your hard-earned money work for you, so you can just relax and spend your retirement without worrying about where the next paycheck, where the next $100 is coming from, so you can eat that week. So let's go ahead, start investing today, start investing tomorrow, and get on your way to a prosperous, financially successful life, so that you can retire happy, your family's happy, and that money is never a worry again, just by investing safely and effectively into the stock market.